Hello, this is Dr. Sheetal Randhir. Today I am going to explain the brilliant key and ways to solve the all types of problem on income from house property. I can say it's one key for all doors. It's key of magic for all learners. First, let us understand what is income from house property. Income from house property is one of the 5 heads of income under which income arising from a house property, which is liable to tax under the Income Tax Act 1961. According to Income Tax Act 1961, house property is defined as house property consists of any building or land appurtenant thereto, which is owned by a taxpayer. Such a building may be used for commercial or residential purposes. However, this excludes a property which is used for the purpose of carrying out the taxpayer's business or profession, the profit of which are chargeable to income tax. Now let's take a look at classification of house property. Classification of house property, it has classified under 4 heads. First, let out house property, which is given on rent. Deemed let out house property, it is assumed that the property is let out but not actually let out. And third is self-occupied house property, which is used for residential purpose. And the last, house used for own business or profession. As we have seen first, as per Income Tax Act 1961, we are going to focus on about 3 property: let out house, deemed let out house, and self-occupied house. Here is the format of computation of income from house property. Before that, first let us understand few important concepts. First, municipal valuation. This is the value which is determined by municipal authority for levying municipal taxes on house property. Next, fair rent, FR. It is the rent which a similar property can fetch in the similar locality if let out. Next, standard rent. It is the rent fixed under Rent Control Act. Students, the owner of house property cannot expect or demand more rent than standard rent. Then AR is known as annual rent. It is the rent of 12 months in previous year if property is let out. Then next, your unrealized rent. It is the rent which the owner cannot realize or earned. Then next, LDV, loss due to vacancy. If the let out property is vacant during the previous year and there is loss of rent, is known as loss due to vacancy. Now let's take a look at a brilliant format or brilliant key to solve income from house property. Let's see the format first. First, reasonable expected rent, municipal valuation or fair rent, whichever is higher, and the higher amount and standard rate, whichever is lower, is known as a reasonable expected rent. Then see in the format, second, rent received or receivable oblique actual rent received after excluding unrealized rent but before deducting loss due to vacancy. Then third, first or second whichever is higher. Then fourth, loss due to vacancy. Then fifth, 3 minus 4 is equal to gross annual value. If you will deduct municipal taxes paid during the year from gross annual value, you will get net annual value. If you will deduct standard deduction under 24 and interest on house property, house loan, then you will get taxable income from house property. Let's have a look at brilliant key to solve the problem quick. See here, number first, MU or FR whichever is higher, and the higher amount, and SR whichever is lower, that is known as RER. Then second, AR minus UR. Then third, 1 or 2 whichever is higher. Then fourth, LDV. Then fifth, 3 minus 4 is equal to gross value. Sixth, gross annual value minus municipal taxes is equal to net annual value minus deduction under section 24 is equal to taxable income from house property. Now let's solve the university exam problem. Here is the problem. Karna Rajveer owned 2 houses for financial year 2019-2020. Details are given below. Let's have a look at problem. Fair rent is given, municipal valuation, municipal taxes, annual rent, land revenue paid, ground rent due, interest on capital, nature of occupation, and date of completion. So let's see the right hand side, the solution. We'll use our brilliant key and brilliant format. First step is reasonable expected rent. Here MU or FR whichever is higher, and higher amount and standard rent whichever is lower, that is equal to reasonable expected rent. So for first house, reasonable expected rent is 3,36,000 and 2,35,000, as standard rent is not given here, so we have considered the higher amount from municipal valuation and fair rent. Then second, rent received or receivable, 3,38,000 in first house and 2,35,000 in second house. Then number third, first or second whichever is higher. So in case of house first, 3,38,000, and for house second both are same, so we can take 2,35,000. Then step 4, loss due to vacancy, it's not applicable. Step 5th, 3 minus 4 is equal to gross annual value. So here is the gross annual value. First house 3,38,000 and second house 2,35,000. Now let's deduct municipal taxes paid only. So we have considered only paid amount. So in house first minus 4,000 and in second house nil. So gross annual value minus municipal taxes is equal to net annual value. Here is our net annual value, 3,34,000 and 2,35,000. Then less deduction under section 24. First standard deduction at 30% on net annual value. So we have to calculate 30% on 3,34,000 and 30% on 2,35,000. So here is the amount in house first 1,200,000 and house second 70,500. Then less interest on housing loan, section 24B of the Act. So in house number first is nil and house second 1,14,000. So here is the total of standard deduction, and we have given the number B for standard deduction and number A for net annual value. If you'll minus standard deduction under section 24 from the net annual value, you will get taxable income from house property. A minus B is equal to taxable income from house property. So for house first, 2,33,800, and for house 50,500 is a taxable income from house property. Now let's assume that if the property is self-occupied, in this case gross annual value is equal to nil. And let's assume that if the property is deemed to be let out, then in this case gross annual value is equal to expected rent. Finally, I can say practice more and more problem with the help of this brilliant key, cause only right practices can make man perfect. Do your best. Thank you. Your suggestions will be helpful for my improvement, and your questions are always welcome. Thank you very much.